Welcome! In this explainer, we're going to help you completely master the trial balance, especially for your exams.
So how do they do it? Well, that's exactly what we're going to answer by diving into a really key tool that every accountant uses.
All right, let's take a quick look at our plan. We'll start with the fundamentals, what a trial balance is, why we even bother preparing it, and of course, how to do it. Then, and this is super important for exams, we'll get into its limitations and some hidden errors, and we'll wrap everything up with a final review to make sure you're ready.
Okay, let's jump right into Section 1. We're starting with the basics. What exactly is a trial balance?
So what is it? Think of it like a summary sheet, or even a scoreboard for all your accounts. You simply list out every single account, and you put their final balances into one of two columns, a debit column and a credit column. The whole point is to see if the totals of those two columns match up. If they do, that's a really good sign that your math, at least, is correct. It's kind of like the first major checkup in the entire accounting cycle.
This right here is a really important idea, especially for your exams. The trial balance acts as a bridge, linking your ledgers to the big final reports. But here's the catch, and I want you to remember this. Just because it balances, that is not proof that everything is perfect. We're going to come back to this, but keep that in your mind. Okay, so that leads us perfectly into our next section. Why do we even prepare this thing? What's its real purpose? It's actually more than just a quick math check. So there are a few main goals here. Of course, checking the arithmetical accuracy is a big one. It also helps you start looking for errors, and it summarizes everything in one place. But the most crucial objective, the real reason it's so important, is that it provides the foundation for preparing the final financial statements. You know, the profit and loss account, the balance sheet. You literally can't move on to create those final reports without a balanced trial balance first. All right, let's get practical. How do you actually prepare one? Let's walk through the steps and the rules you'll need to follow.
It's a pretty straightforward process, really. First, you need to find the final balance for every single one of your ledger accounts. Then you just list all those account names. Step 3 is putting the debit balances in the debit column and the credit balances in the credit column. And finally, you just add up both columns. If the totals are the same, congratulations, your books are arithmetically accurate.
Okay, everyone, listen up. This slide right here, this is probably the most important slide for your MCQs. You absolutely have to memorize this golden rule. It's simple. Assets and expenses will always have a debit balance. Always. And on the other side, liabilities, income, and capital will always have a credit balance. If you can lock this rule in your memory, you'll be able to answer so many exam questions correctly.
And here's our first big MCQ alert. You might see questions about different preparation methods. There's the balance method and the total method. Now, a lot of students get these mixed up. The key thing you need to remember for your exam is that the balance method is the common one. It's standard practice. It uses the final closing balance of each account. That's the one you need to focus on.
All right, moving on to a really critical section, especially for those trickier exam questions. We've talked about what a trial balance does, but now we need to talk about what it misses. Because even when those columns match perfectly, there can still be some pretty big errors hiding in your books.
This quote really says it all, doesn't it? The agreement of a trial balance is not a conclusive proof of the accuracy of posting. What that really means is simple. Just because the debits equal the credits, it doesn't mean your accounting is correct. The math might check out, but the actual accounting could be wrong. And here we go, another huge MCQ alert. These are the classic traps you'll see on an exam. These are errors that a trial balance will not find. For example, the error of omission. That's when you just completely forget to record a transaction. Since you didn't debit anything and you didn't credit anything, the totals still match. The same goes for posting a correct amount to the wrong account or violating an accounting principle. In all these cases, the trial balance looks fine, but the error is still there, hidden. Okay, we've covered a lot of theory. Now it's time to put it to the test. Let's work through some exam-style questions to see how well you can apply what we've just learned.
All right, first question. Capital is shown on which side of the trial balance? Think back to that golden rule we talked about. Where does capital fit?
And the correct answer is B, the credit side. Why? Well, remember our rule. Capital is the owner's investment, which the business essentially owes back to the owner. So it's treated like a liability, and all liabilities in capital have a credit balance. The debit side is for assets and expenses, so A and D are out. And of course, it has to appear, so C is wrong. See how that rule just gives you the answer? Okay, MCQ number 2. If a company buys something,
but completely forgets to record the transaction, what happens to the trial balance? This one is testing you on those hidden errors we just covered.
The answer here is D. The totals will still be equal. This is a classic error of omission. Think about it. If you forget the transaction, you don't make a debit entry and you don't make a credit entry. Both sides are missing the exact same amount. So even though there's an error, the trial balance still balances perfectly. This is such a key concept to grasp.
Question 3. A trial balance is prepared to test the blank accuracy of the books. What's the best word to fill in that blank? What kind of accuracy are we really checking here?
The correct answer is C, arithmetical. This is the specific, technical term. A trial balance is all about checking the math, making sure that debits and credits add up correctly. It doesn't check if the entries are logical or if you followed the right accounting principles. It's purely a mathematical check. So look for that word arithmetical on your exam. Last question. Which of the following is a disadvantage of a trial balance? This one makes you think a little differently. 3 of the options are good things, they're advantages. Only one is a drawback.
And the correct answer has to be B, that certain errors are not disclosed by it. As we discussed, things like errors of omission or principle can be completely hidden even when the trial balance agrees. The other options, helping locate errors, summarizing accounts, being a base for final accounts, those are all advantages, right? They're the whole reason we do it. So for your exam, knowing its weaknesses is just as important as knowing its strengths.
Okay, let's wrap this up with a final high-yield summary. If you remember nothing else, remember these 5 points for your exam. 1. Its main purpose is to check arithmetical accuracy, just the math. 2. It's a statement, not an account. That's a common trick question. 3. The golden rule. Assets and expenses are debits, liabilities, capital and income are credits. 4. A balanced trial balance can hide major errors. And 5. It is the essential link between your ledgers and your final financial statements. Master these, and you'll be in great shape for any questions on this topic. And to leave you with some to think about, if the trial balance can't find these hidden errors, what other checks do you think accountants need to perform?